And I'd like to spend some time talking about secure digital ID and know your customer requirements. Mr. Dimchak spoke eloquently about the difficulties of dealing with financial fraud, and a lot of that is identity fraud. Mr. Moynihan had a very unpleasant experience with the failure of the federal government or state governments to have any kind of secure, reliable way of authenticating you are who you say you are online, and exposing you to very high levels of fraud and having to do something quick and dirty and unfortunate in trying to fix that. This experience wasn't shared in countries where they had a secure and reliable way of proving you are who you say you are online. And the EU, most all of you do business internationally, and you're probably aware the EU has a very comprehensive roadmap for a secure digital ID that would allow you to, if you want to open a bank account, you walk into a branch, you get out your cell phone, you say, okay, you get your passport or whatever it is, or your Real ID compliant driver's license if it's in the U.S. that's on your cell phone. Convince your cell phone that it's really you and someone hasn't stolen your cell phone, and with a pretty quick interaction, have a very secure way of proving that you are a single legally traceable person. And there is a roadmap that's actually being rolled out by a number of states. Ironically, the technical standards behind those were all developed by NIST in the United States, now adopted by ISO and now being used in Europe. There are countries that you do business in, like Korea, where this is a reality today, that you can prove you use modern technology, use your cell phone effectively like a security dongle. So what is your stance on this? What are the differences you see in the different countries that you operate, some of which have secure digital ID, some of which are moving toward it? And what is your feeling of where the United States should be going on this? Mr. Dimchak, we'll start with you.
Thank you for the question and for the thought that you've clearly put into this. It is a big problem in our country, and I think we should move towards a digital ID. It's something that the banking industry is actually working towards today with a product called Authentify, where once you authenticate yourself with one bank, we can share that ID in any other service that you might want to use electronically. We have to get this sorted. Fraud is a massive problem. And our methods, our historical ways to deal with this aren't working.
And that's a very noble approach to deal with a serious problem. But I think that there is ultimately a real government function in issuing that, that authentication. And we have that in the Real ID. We have that for physical ID. And there are standards that are being deployed in individual states. So I'd just like to end with a shout out to the Better Digital Identity Improving Digital Identity Act that we now have moving in both the House and the Senate. It was marked up in OGR. Senators Loomis and Kirsten Gillibrand are behind it. And if we can get this across the finish line, at least on the government level, we will hopefully have something to avoid the nightmare that Mr. Moynihan's bank went through, and at least have the government given a way to have citizens authenticate themselves.
There have been 9 rounds of layoffs notices to more than 350 Iowans since April. From what I understand, that's due to a slow mortgage industry. Is that correct?
I believe that is correct, Congressman, okay. Yes.
Thank you. And now last month, Bloomberg reported that Wells Fargo is planning a major retreat from its mortgage business, which, boy, I do not like the sound of those words. Those mortgage operations are, of course, one of the primary businesses in Iowa. And can you confirm whether that story is accurate? And can you discuss what will happen with the 13,000 Iowans that Wells employs if you shrink mortgage operations?
Congresswoman, first of all, as we've discussed, Iowa, Des Moines specifically, is a very, very important location for us. It has been for a long time, and I see that continuing to be the case for a long time to come. I don't see that changing. We do operate within businesses that are susceptible to market conditions. Volumes go up and volumes go down. The changes that we've seen in the mortgage business are the most significant changes we've seen in the shortest amount of time, given the move in rates. And so we, like all other mortgage companies, have had to take a look at our own infrastructure and ensure that it's sized properly. The first thing we do is we do try and figure out, are there other roles inside the company that impacted employees can play. And I know that we have moved a significant number of employees from one division to another as we've gone through these changes in the mortgage business. The other thing I should just point out is the mortgage, Des Moines began, I should say began, when I think when we acquired a company that was in Des Moines way back, it was a mortgage business. And for quite a number of years, the only thing that we had in Des Moines was mortgage. That's not true today. We have pieces of large parts of the company that reside there. And so if you live there and you want a role elsewhere, it's quite likely that you'll be able to stay in Des Moines and play that other role.
Well, that's good to hear. You still haven't answered the question. Can you confirm whether that is accurate, that you will be seeing a major retreat from the mortgage business?
Congresswoman, we have...
Yes or no?
Well, I don't.
Is it accurate?
I don't know how to define what a major retreat is.
Is Bloomberg correct when they said you're planning a major retreat out of the mortgage business? This is a real easy question.
No, it's Congressman.
Yes or no?
The mortgage market is substantially lower today than it was, and so we are significantly.
Okay, so I'm not getting an answer. What I did think I heard from you is that with the 13,000 Iowans, if I'm hearing you correctly, you will do everything in your possible power to find another job for them within the other parts of Wells Fargo that are located in Iowa. Is that correct?
Congressman, that is something that we do across the whole country, not just within Iowa.
Okay, so we're going to have to follow up on this because I'm still not getting a straight answer on what's going to happen to the tons of people in our district that you won't answer this question about what's happening. And what I don't want to see is all of a sudden we wake up and in the Des Moines Register, I've got 1,000 people lining up to make sure that they can get unemployment. And the other thing I want to make sure that we do is address TAA if there's going to be any conversation around moving jobs out of this country, okay? So we'll be in touch with you about
and have been expressed by my Republican colleagues and some of you. Looking at the last few months, from May on, prices have held steady or dropped. The University of Michigan anticipates prices to drop over the course of the next year. So in conversations with your economists, what do they predict? What do they think is going to happen?
Our economists have this quarter, third quarter of 2022 is a positive GDP, negative for the fourth quarter of this year, negative for the first quarter of next year, and I think negative for the second quarter of next year, and then moving positive and ending up at a 2% year-over-year growth rate in the fourth quarter of 22. That's the estimates they have. No,
thank you. And you know, I dealt with them at the beginning of COVID. I don't know if you recall, just to kind of get their analysis, what they expected COVID to do to the economy if we did nothing, if we just, held steady, everything went, we didn't do PPP, we didn't do unemployment, we didn't do any of that, and they said, well, then we're going to have trouble. And, thank goodness, from my point of view, we did a lot to keep the economy moving. And, obviously there's a year-over-year increase in prices, but if we go forward on an annualized basis, just based on August, it's 1.2% for the next year. And if you look at the whole summer, it's less than that. So what I'm worried about is an overreaction by the Federal Reserve. And the last time we saw them increase interest rates like this was back in the 80s and early 90s. And I can tell you, Colorado got clobbered. Housing market just stopped, as did everything else. And so, Mr. Demchek, I'm going to turn to you because
in actually rather good shape. They're spending money 10% more than prior years. They have a good balance sheet. Their debt balances are low. Their confidence levels are going up. Jobs are plentiful. I think it's a good thing that wages have gone up for the lower end. That's all the good news. That's being met by other forces, which we don't know the full effect of. That's war in Ukraine, oil prices going up, interest rates going up, inflation, and the worst possible outcome is stagflation. And so those things will absolutely cause a slowdown in the economy, at one point increase unemployment, and we don't know the full outcome.
Consumer Price Index numbers showed inflation is not going away anytime in the near future. Everything costs more now. And low to middle-income Americans are hurt the most. Mr. Cesari and Ms. Frazier, in your opinion, I know that the ranking member touched on some of the implications of sustained inflation, particularly on consumers' credit and the economy. But in terms of the level of savings and credit card debt, what are you seeing on the ground from your customers, your clients? Mr. Cesari.
Thank you, Representative. You are correct that inflation is impacting those who can afford it the least. While consumer spend levels in total are about 10% above last year, the things that people are spending money on have changed substantially, from discretionary to non-discretionary items like food and gas, as you mentioned. And I think it's appropriate that we're very focused on inflation because, again, it is most harmful for those who afford it the least.
And are you seeing, in fact, credit card debt go up and savings go down?
Savings levels continue to be above pre-pandemic levels across all stratas of deposit levels, from 2 to 4 times. However, they're stabilized. For 18 months, they were growing each and every month, and they've stabilized the last 3 months. Credit card spend rates continue to be high, and payment rates are actually starting to normalize, but still well above pre-pandemic levels.
Thank you, Ms. Frazier, please.
Thank you very much. I would say that it's early days still in terms of seeing the impact of high interest rates on the consumer in the States. Fortunately, they entered this period with pretty strong balance sheets, but we would anticipate that if interest rates remain high, in order to tame inflation, that we will see greater stress, particularly in the lower FICO scores, in credit, and that we will also see the savings rates coming down further than we have done. I think we're fortunate to have had the consumer in good health entering into this, but we do expect we're going to be in for tougher times ahead.
Welcome to Key Stock and Crypto Channel. Jerome Powell sinks the market.
And as Jerome Powell was sinking the market, the CEOs of the big banks were in front of Congress. And guys, we know this is all acting, all part of the stage. We had a lot of moving pieces today to take all the attention off the Fed. But the big banks talked about digital ID, KYC, and we see how the legacy market is moving over to the crypto market. And then also how inflation is eating away at the dollar. And guys, what have I been telling you for a long time? As the Fed raises rates and starts to shrink this balance sheet, which they haven't started good yet, it's going to cause a ripple effect in the economy. Once you see mortgages take a hit, everything else takes a hit, guys. And we're going to have mass layoffs. It was brought up in the Fed meeting and it was brought up in the banking meeting. If you're taking away all the free money, these monopoly banks and corporations are not going to turn around and help the people. That's the reason why Jerome's state is going to be paying. And Jamie Dimon said it also. He's been warning that it was going to be paying a long time ago. Stocks and cryptos are going to take a hit, but guys, we know the reason why. These next 2 years are going to be tough, but as long as you strategize and we know where this economy is going, you're going to be fine. But guys, all I have for you, have a wonderful day.